Good morning. I hope everybody enjoyed the dinner last night. We are about to start the third session of the 68 IREPAS meeting, and this session is going to be the traditional session, the panel with the committee, IREPAS committee chairman. I would like to start by introducing the committee chairman. And most of you already know them very well, but just as a tradition, starting from the other side of the panel, Mr. Yusuf Güven, representing Raw Material Suppliers Committee, Mr. Michael Setterdahl, representing the Traders Committee, Mr. Kim Marti Sobirana, representing Rebar and Wire Rod Suppliers Committee, and Mr. Urdal Bela, representing Billet Suppliers Committee. He's also the chairman of IREPAS. Shall we start by listening to the conclusions of the Raw Material Suppliers Committee, Mr. Güven?
Thank you very much. Good morning, everybody. I would like to start with some information about what happened in China and iron ore in the beginning of this year. Chinese have started destocking and they have consequently increased iron ore prices, which made the cost of a blast furnace equal to arc furnace. And as a result, China has imported some quantities from America. They have imported scrap, which resulted in, of course, lower inventories available for the rest of the world. Of course, Chinese destocking has completed now, but imported quantities of scrap from United States, including East Coast, have moved to China. We didn't have a very strong winter, as you all know, this year. So every winter, and we are always expecting build-up of inventories inlands in Russia, inlands in East Coast, but these inventories this year have been moved. They are not existing this year. So in April, we should not expect unsold inventories inside the rivers. In Europe, steel production is going up, so the scrap consumption is going up. And it was reported yesterday that in Europe and United States, the inflow of cut grades into export terminals are down by 20 to 30% depending on region. What else should I say? Yesterday it was announced, we were discussing also this morning, it's not settled yet, but yesterday in United States, domestic price of scrap has gone up between $20 to $40 per ton, depending on region. It remains to be seen whether this price increase will be settled. It will be bought by the market. It still remains to be seen. In general, we are seeing that the demand, especially from Turkey, is going to continue. And we cannot say that there is short supply of scrap. There is scrap available who would meet the demand. So it's more or less at equilibrium. So the conclusion of our committee yesterday was we are now in a like $20 margin range of scrap prices going up and down within this $20. We should not expect too much down or too much up. This was our conclusion yesterday. Thank you.
Thank you very much. Mr. Setterdahl, shall we continue with the Traders Committee?
Good morning, everyone. As traders, we are looking at the inventory situations of our customers, and one of the topics was that are the inventory levels too low or too high or whatever. Customers have two concerns. One is their ability to finance additional purchases, and number two, whether prices will go up or down. Most customers worldwide prefer to keep inventory levels low because they are also able to source material quite quickly. The lead times from producer, shipment, and delivery is relatively short, so therefore they have more options to sit and wait. The other issue that we discussed was the protectionist movements in various countries and so forth, and we were reminded, even though that as traders, producers, and customers, we believe the market is going one way, we think we're going to get the next order, or we know something, but at the end of the day, it all depends on also political intervention by governments and also social unrest. When there is a lack of social unrest and there's political stability, obviously it helps people become optimistic about the future and to purchase more steel products. We also discussed the situation for the iron ore base versus the electric arc furnace, which has already been discussed. The balance situation long term will obviously have to be there, but one of the main concerns about whether scrap is economically viable over iron ore depends on the availability of coking coal, iron ore, electricity, and natural gas. Today we have a relatively stable oil price at a high level, and we have a relatively stable price in natural gas on the low side. The various governments in especially this region are reviewing their pricing and their supply of natural gas, and we hear that there are shortages here and there, and there are shortages also in electricity. For example, in China, there is still a major concern about the electricity availability, so we don't really believe that China is going to dramatically shift from this base of having 90% blast furnace based and 10% electric arc furnace based. Obviously, as traders, we're wondering, is the economic situation now in the MENA region ready for takeoff? Are we looking optimistically about 2013? I would say that the consensus was that there is no negativism in the Middle East, North Africa area, there's only upside. That's basically what we came as a conclusion.
Thank you very much. Shall we continue with the Billet Suppliers Committee conclusions?
Good morning. In IREPAS, we got three main suppliers of billets, the Turkish, Ukrainian, Russian, and plus, of course, Brazil. So after the discussion that we had yesterday morning, the main points that came out were following. Number one, the last year in 2012, the price of iron ore was so low, had a big pressure on flat products. Eventually, the price of slab was almost like $80 less than the price of billet, which forced most of the suppliers to produce less slabs and more billets, which will not be the case, I believe, in 2013. This was the conclusion. In Turkey, Çolakoğlu İsdemir, who has in fact big slab capacities but used for their billet production rather than producing slabs. As well, the same has happened in Russia and Ukraine. Even in Brazil, most of the mills had to reduce their blast furnace capacities because there was a huge drop on price of slabs. So we believe in 2013 this will not be the case, so there will be more slab production and relatively less billet production due to the circumstances. The second, we don't believe the price of scrap really will go down, so this will be another reason to hold the prices at least where it is. And for the last 4 months, we see the price of billet remain rather stable, whereas the price of scrap is fluctuating. So this is also creating a little bit of pressure on producers. But as a conclusion, what I can say, based on today's price of scrap and arc furnace, is not capable to run its operation with the current price of billet. So I believe the mills either has to force the prices upwards or has to slow down their productions. And this was the case for the last 2-3 months of 2012. Most of the mills, especially in Turkey, had to stop their production during the daytime, only worked on the nighttime in order to reduce their production cost. So as a conclusion, 2013, although seems might go sideways for the first, let's say, quarter, but definitely is going to be better than 2012. So I believe we will have a rather stable situation in the first half, even after what Yusuf has just mentioned about the price of scrap in US. We might expect a little bit of increase in coming days because the trade was rather low for the last 2 months. So we are expecting some activity in coming months. Thank you.
Thank you very much. So let's hear the conclusions of Rebar and Wire Rod Suppliers Committee now.
Good morning. Good morning, everyone. As sum up of the discussions that we had on the
Is it working?
that we had on the Rebar and Wire Rod Committee, 2 main points. First, as a status of the business, being coincident with what we have heard on the 3 opinions before, business in Rebars and Wire Rod started 2013 relatively slower than expected. But just discussing and seeing what are the prospects in different markets, we firmly believe that 2013 will be a better year than 2012. Reasons for that, as usual, we analyzed by areas what was the situation. We started with the ZCC area, and obviously there was the first good news. It appears that, or it looks like if in this area where we are sitting today, business is going to be fine. There are a number of projects, very relevant projects. There are a number of initiatives that will create good demand in Qatar, in the Kingdom of Saudi Arabia, in Oman, in Abu Dhabi, and even in Dubai. They are seeing, after obviously the wave of the crisis in 2009, they are seeing the real estate market. They are recovering. They are seeing initiatives to do new projects. So even their prospects for 2013 are good. So this area looks really promising and good. There are new capacities coming into stream, but it appears that everything is good under control, and that demand will take these extra capacities. Another important market, Turkish market, is also in terms of domestic market is growing strong. Nice projects in the pipeline, especially in Istanbul, third bridge, new airport. So all that is giving the outlook that demand in Turkey for rebars and wire rod will increase this year. Asian markets will stay strong in terms of demand, and also Africa, very promising. Africa, someone called that Africa the new China of the next maybe 10 or 15 years. Everything very promising. Their economies all looking good, and demand expected to grow. And in America, Central America and South America, they are looking, although some countries like maybe Brazil, they are not performing according to the high expectations that were put on them, but there are a number of economies, a number of markets like Colombia, Chile, going very well. They are also in Central America. Mexico is looking good, and even North America, United States and Canada, they are looking as they're going to have a good year this year. So in general, demand looks good. So on that side, the committee was optimistic. Second and last point we discussed was, and as it mentioned here today as well, import restrictions. I mean, that's creating a little bit of disruption in the markets. We are facing import restrictions in markets like good markets and important markets like Egypt, Morocco, other ones. And that's creating a little bit a temporary unbalance of supply and demand because volumes are looking for new markets, and that's creating pressure in those new markets. So what we can see today is that margins in products like D-bars or wire rods are under strong pressure. Margins up, we would say at the lowest level in many, many years. So that's something that we, as a community, I think we need to correct and be very sensible when we approach markets. Be very sensible in terms of keep a healthy balance in terms of supply and demand, and not put a lot of pressure on those markets. So those were the two big points that we discussed on the committee. Thank you.
Thank you very much. So, excuse me. Looking at my notes here, I understand that the new year has not started as expected. It has started a little bit slower than expected, but there are some changes in the market to be observed. Starting with the scrap side, I understand there is no expectation to see unsold scrap inventories in the market after the winter season, and the scrap consumption in major markets has been increasing. So there might be a certain pressure on the supply side. I understand. I have also understood there was a price increase. There is a price increase in one of the major markets, the U.S. market. Domestic prices have been pushed up, but it remains to be seen if those prices will be accepted in the market. It's pretty new, I guess, as far as I understand. One of the points that I have noted here is that the billet supply in the market is expected to be less than last year, during when the slab prices were under pressure. So many steel mills had opted to produce billets instead of slabs, increasing the billet supply in the market during 2012. So this year we are going to see relatively less billet supply in the market, mainly from Turkish producers, Brazilian producers, and CIS producers, CIS suppliers. Obviously, the major concern for the producers is the profit margin. It's still the profit margin, taking into consideration the cost of raw materials, scrap, and the production costs. So I understood mills are still trying to control the capacity utilization, try to control the production costs in order to sustain at least some margin during the operations. On the product side, the market outlook looks good for GCC. Turkish domestic market outlook is also good, with strong demand in domestic market based on the new projects on infrastructure investments. Asian and African markets show relatively strong demand with some optimistic expectations. Although Brazilian market has not been performing as expected, the other Central and South American markets have been performing good and expected to continue like that. Likewise, the Northern American markets. So overall, I understand we are on for a better year than last year. We're going to see a better market situation compared to last year, with some potential improvement in demand and possibly in prices during the next few months' time, based on the current situation of low inventories in the market and the raw material price movements. So I hope I have not missed anything here. Thank you very much, Mr. Chairman, for all your comments. Are there any questions from the floor before I go on with the questions we have gathered? No questions at the moment from the audience. So, as usual, we have gathered some questions for the committee chairman, for the IREPAS committee chairman. I will start with those. Please let me know if you have any questions at any moment, so that you can direct your questions to the chairman of IREPAS committees. Obviously, these questions are meant to be directed to certain committees, but as usual, you are more than welcome to add your comments. So this one, we'll start with, actually this one was directed to the producers committee in general. Many mills have been reducing capacity utilization rates for some time. However, it has apparently not provided the cure to the oversupply problem in the market. Can there be any other measures to address such problem? What would you like to say?
I don't know what to say. I mean, if there's any other measures to be addressed, but you know, the basic principle is supply needs to meet demand, otherwise there's unhealthy environment. So in order to run at a healthier, or let's say proper environment, you have to go along with what market says. And in order to do so, you should not put more supply than what the demand requires. But of course, there are certain other issues that sometimes puts pressure on companies. But what we see over the last 3 or 4 years, the mills or the steel companies are, you know, doing their utmost to comply with this issue, especially in Europe. I mean, the European producers really have this production discipline. Whenever the market slows down, then they move accordingly. This is why, despite all the other issues that they have to, you know, carry, they still maintain their positions. This is what I can say. I mean, up until now, even some of the other countries, Turkey is one of them, where production cut is something they really try to avoid as much as possible, but what we see over the last 2 years, they also start gaining the same discipline as it's in Europe. But any other measures that I can think of, it's not really coming to my mind at this moment.
Any other comments to be added?
Yeah, I think just online on what you were saying is, I think the more than capacity, we have to, as you say, we have to talk about utilization, yeah, production level, and because the truth is that the demand for long products is growing. So if demand is growing, obviously every year we need more capacity, but it needs to be in line. I mean, it needs to be in line in terms of time, in terms of regions, in terms of markets. As we were discussing yesterday, an example is Europe. I mean, obviously in Europe, we have the European producers, we have a clear understanding of what's happening. We are seeing our market dropping, especially in the south. So we understand that maybe we cannot cut our capacity because it's not easy. But what we have to do is we have to adjust our production. And this is something, I mean, the law of supply and demand is simple and it works. And it's a simple thing. You have to adjust your supply to the demand that you got available to a healthy point. I mean, if you think on available demand, you can think on millions of tons. But obviously, you have to think on the demand that it's healthy and it's reasonable to aspire. And this is, I think that's the word, I mean, it's production, to have more than capacity, to have production under control.
Thank you very much. I guess there are no other comments. So next question is for the Raw Material Suppliers Committee. It's like global scrap availability has tightened significantly in the last decade, and Turkish mills have so far managed to replace diminished supply from the CIS by purchasing cargoes from the EU and the US. How do you think the future global scrap availabilities will develop, and who would be major scrap suppliers?
Well, let me combine the answer with the first question. First of all, about the demand for scrap. It's reported that Mexico is going to increase arc furnace production within the next 3 years, and they are reporting to be demanding quadruple of their scrap imports, which is pointing about another additional 2 to 2.5 million tons per year. Saudi Arabia is increasing scrap consumption, and they are also becoming not a major scrap importer, but a scrap importer, and Egypt is increasing their demand. Individually, these countries might not be comparable with Turkey, let's say so, but if you add up everything, it's a figure, it's a number. Apart from that, regarding CIS availabilities, we have this year the following problem. The availability of scrap is getting less and less, and moreover, the Black Sea fleet is getting older. During the last month, I have big problem in insuring our vessels. They are rejecting every 2 of 3 vessels that we nominate, the insurance companies. They refuse to insure the vessels. And it's going to be a major problem in transportation of scrap from Black Sea. Of course, one should always argue, where is the scrap going? Where is the steel production? The world is continuously producing steel, and where is the scrap? It's in China. For China, frankly speaking, whatever figures we are giving is going to change in the next 3 months. Every 1% of change in the forecast is changing millions of tons. But I would say, based on fundamentals, based on current data available, China is reported to be a next scrap exporter by the year 2020. Of course, this should not mean anything to anybody, because after 3 months I could tell you 2015 or 2025. But at the end of the day, this scrap is in China. Of course, this is adding to a reservoir. Doesn't necessarily mean that it's going to be exported. Doesn't necessarily mean that it's going to be offered. But I think the steel that we are always calculating, what happened to the steel 20 years ago, 30 years ago, that steel is in China. So they will, okay, years are passing so fast, but in one moment they will be the biggest scrap holder, let's say so. Not necessarily to be offered.
Mm-hmm. Thank you. Any other comments?
I'd like to add something. I mean, the arc furnaces produces long products, where the blast furnaces mainly produce flat products. But if you look at the prices over the last 2 years, the price of the flat products is in fact lower than the price of the long products in general, because the main reason is price of scrap is higher than iron ore price. And I believe, you know, the market will somehow find an equilibrium for this. I mean, if I would be a blast furnace producer, what I would do is just put up a billet caster, because I know if a blast furnace today produces billets, it's going to be much more profitable. We have seen the last year the price of slabs is almost $100 lower than the price of billet. So I believe if this situation continues, price to be tight and more expensive compared to iron ore, and you know, the analysts or the specialists say that over the, say, medium term, price of iron ore expected to be rather lower than what it is today, it means the blast furnaces or the converters will continue having an advantage over the arc furnaces. So we might see some converters casting more billets than slabs, or they might start investing on long products as it used to be. I mean, in the past it was the blast furnaces producing the rebars, but over the years it was arc furnaces because scrap was cheap. Maybe this might change. So somehow the market will find its balance, what I believe.
Thank you. Next question is meant to be for the Rebar and Wire Rod Suppliers Committee, but it has, more or less, it has been answered during the when we were listening to the conclusions of the committees. But let's see if you have anything to add. The question is: due to relatively strong raw material pricing, profit margins of long steel products remains extremely tight, if existed. Do you see any solution for this issue in the near future?
I mean, the way to face that basically is every company needs to try to know in depth the markets where it wants to play, the markets he's targeting, because obviously margin is a component of two things: selling price and cost, right? So the first thing you need to do is try to maximize your selling price. How you do that? Geographical mix, product mix, grades, distribution channels. So you have to try to make the most of all those variables. And then with all that, see what is the volume, what are the tons that you have access with a healthy result. And I think that's it. And all that at the end also adds the variable again of production control. Production control according to the tons that you can really sell in a healthy way.
Mm-hmm. I think that what we will see in the near future is that if we return to 2 to 4% average growth, economic growth in the entire world, then the mills will be able to add that value-added extra margin, and that is what needs to happen for the steel industry to become, once again, a profitable business.
I mean, who would say, like, say 5 years ago, that America all of a sudden would be a place to invest for the new steel production? I mean, in late 80s, the whole steel industry in the US got bankrupted. Now, all of a sudden, US became a good spot to invest in steel. Europe, today, totally out of the game. Nucor is investing $2.5 million at DRI, and there are other European mills, what we know, that intending to do the same in the US because of the cheap gas. So the things change quite, fascinating and unexpectedly. So whatever the comments or the thoughts we come up with, we see over the time there are new things coming up because of the changing circumstances. So it's very difficult to foresee, but what, to my opinion, we might face in near future that at least the converters will have a relatively advantage over the arc furnace because of the tight supply of scrap.
Thank you. It is certainly an age of change. I guess the only sustainable thing is change in this market. So we have to see what's around the corner for us, for all of us. Next one is directed to the Traders Committee, Mr. Setudal. Will reinforcing bars can still be higher priced per ton than hot roll coils, or do you expect the trend to be reversed in 2013? In other words, do you see a relatively slower demand for reinforcing bars compared to last year, I presume?
I think the question is upside down or inside out, I don't know what, but the economic activity in the entire world since 2008, except in China, has been on a low level. So I believe optimistically that once we return to normal economic growth throughout various regions and also throughout the world, that the demand for reinforcing steel and products that go into construction infrastructure will improve, because right now we're at the low level of the cycle. And then the other part of the question is that it's not correct that hot roll coils are more expensive than flat products. It depends on region. And that is basically a supply and demand situation that causes those price differences today. And then also what Mr. England said yesterday, that the propensity of the steel industry to always try to produce that extra ton of steel And where hot roll coils are cheaper than long products, it's the integrated mills who are chasing that last ton of steel that causes that price erosion.
Thank you. Just before we continue, sorry, we finished the first round of questions. Are there any questions from the audience for the committee chairman at this point? I cannot see everybody, but there are no questions, I guess. All right, so I continue. This is for the producers once again. Some steel mills continue to invest to increase their nominal and effective capacities in an effort to reduce their per ton production costs under extremely competitive market circumstances, providing minimal profit margins. However, increasing capacities creates more pressure on the prices. How would you comment on this dilemma?
Well, I think we've been discussing about this. If you take the sentence as general, I mean, okay, it makes one sense. But if you take, I think you have to, if you divide it in geographical areas or in markets, and in some markets it makes sense. I mean, it makes sense in the GCC, as an example, to see new capacity coming. It makes sense in Africa to see new capacity coming. So it's just the time. I think what every company, every mill needs to be very sensible is to adjust the level of production to the market that is got available. And this is, I think, this is the key point, because as a global, more capacity will be needed in the future. But it's obvious that it needs to be put in place in the right place and at the right time. So I think it's a question that every single company, every single investor, when we think on investing in capacity for steel products, need to have a clear understanding on what are the markets that it's targeting and what is the timing, the right timing that it needs to apply.
I believe that question is more a historic question for the steel industry, and that the next generation will be more concerned about trying to study the effects of natural gas price increases, electricity increases, lack of scrap, changes in iron ore, because all those things are more dramatic and more immediate than trying to increase your electric arc furnace from tapping 100 tons per hour to 110 tons per hour. Because if there's not enough electricity, if there's not enough scrap, it's kind of irrelevant. So people have to make the decision, where is the demand for the product? Will I be able to service my customers? And how will my government treat my industry in pricing my raw material costs that are influenced by government, and then the scrap industry or the coal or iron ore industry's pricing?
My observation is those investments being done for the short past, it's not really to increase the quantity of the production, but to increase their productivity and the efficiency. I mean, let's say a producer having 100-ton arc furnace, he's renewing with 150. His aim is not to have an output of 150 tons an hour, but he likes to have this 150 ton at a time when the electricity is cheap. So most of the people, most of us, let's say, when we do those investments, we know that we won't be able to manage to sell or market all the product, but we would like to have the flexibility, at least when we receive a certain margin, that we can maximize that output as much as it allows. Otherwise, as you know, it doesn't really make sense. I mean, and also, the profit margin, we keep talking about the profit margin, but the reality is the steel mills today is not making any profit. When we mean margin, we're trying to minimize the lost margin we currently have. So the issue to make an investment in order to minimize that loss, at least we can survive until the good days to come. Unfortunately, we're going in a tunnel where we don't know where the light is going to be seen, So I think name of the game is to continue surviving until we see the light.
Thank you. Any questions, any comments on this issue from the floor? No. Okay. Next one is for the rebar and wire rod suppliers. It is on Europe. It was reported that the overall finished steel exports from the EU 27 increased by 4.15% in 2012 compared to 2011. What's your expectation regarding steel exports and imports of EU in 2013, obviously taking into consideration the economical situation?
Okay, to split that 4.15%, majority of the big players in this export business last year, if I take it as countries or markets, were mills in Spain, in Portugal, and in Italy, basically. That's where the market is going worse in terms of demand, and it's not expected to improve this year. Just contrary, I think Spain is going to, well, Spain maybe is going to stay there, very low level, but stay where it is. Portugal probably the same, Italy is still going down. So it's true that less domestic tons will be available for those mills. What can you expect? Obviously, the first point, again, and this is the exercise that we have been doing for the last 4 or 5 years, the first point is to adjust our production levels to the newest scenario. We understand that that's the first option we need to consider, but obviously at the meantime we have commercial teams that they try to find opportunities, but again, repeating the same story, opportunities that are good, are healthy, and are giving us margin. So that doesn't mean that those volumes that, especially in coming from Italy, will come to the market, or will appear, or will go to export. Some of them, yes. Maybe some an extra activity, but nothing considerable. So if we find next year that export from Europe has increased another maybe 2%, 3%, that's probably going to be the figure.
Thank you. Any other comments? No, I guess. All right. Well, yeah, this is once again for the producers, or it could be a general question as well. That includes also raw materials. Can we say that the DRI-based producers will become new powerhouses in the market? It has been discussed a little bit yesterday, but who would you like to comment?
Let's ask the Michael, because they're investing heavily on DRI.
Our company has indeed invested in DRI facilities, and ironically we got into the DRI business because we took a DRI facility that was built in the United States before Enron Corporation raised the natural gas prices, because that investor thought it was the next new powerhouse. And we bought it and moved it to Trinidad because the cheap natural gas was in Trinidad. And we modified and operated, and we became very comfortable with the DRI technology and putting it through our electric arc furnaces in the United States. Now, 3.5 years ago, we decided to start digging a new DRI facility in Louisiana, and it is indeed based on the projections of a continued low natural gas price in the United States. And all DRI producers obviously are also dependent on the pellet price, the iron ore price plus a pellet premium. And if everyone goes into the DRI business, then the pellet premium will go up. So there's no certainty in any investment. I believe that everyone here in this room understands and appreciates that investing in the steel industry is a very risky consideration, and it's usually a 10 to 20 year investment. And as Yusuf said, the markets change every 3 months. So we view it as a good situation for us. I believe it is a very good situation for people like Qatar Steel here in Qatar, and that with the 2 to 4 and 6 and 8% GDP growth in this region here in the MENA region, DRI probably will play a larger role because of the fact that Yusuf mentioned and Ugur about the lack of scrap possible happening, so it is an alternative. And everyone that has an electric arc furnace, they can also choose and have an option DRI or scrap. Whereas a blast furnace converter operation, they don't have very many options. So the more options, the more flexibility, the more chance for success.
Absolutely. Any other comments to be added? Well, yeah, I mean, as you have also mentioned, you never know what's going to happen next in 3 months' time, 6 months' time. Well, as we have heard from Raw Material Suppliers Committee conclusions, we may have an invasion of Chinese scrap in the market maybe by 2015, maybe by 2025. So things may change.
We have discussed about this on our last IREPAS meeting. About my personal expectation there will be more arc furnaces coming up in China because of the low local scrap. So this might give an advantage. And DRI, as you know, is not really an easy item to move from one place to another. I mean, when you make an HBI form, then it limits the consumption of the arc furnace. You cannot go beyond 5 or 10%. And
sure.
Plus, it brings some other consequences that the technical guys at the arc furnace doesn't really like. So I don't really think that DRI would really be a major issue, or let's say a substitute for the scrap. But definitely will give a big advantage to those who are able or capable of using DRI as it is, especially on the hot charge form they do in this part of the world.
Sure. Thank you. Yes. Yeah. This one is directed to the Raw Material Suppliers Committee. With the protectionism spreading in waves, governments started building higher trade barriers for raw material exports and steel product imports. Do you think we will see more attempts to reduce the raw material exports from certain countries?
First of all, let me say what I think and what I hope is two different things. I hope free trade is going to continue. I think if in a country there is an excess of a commodity, then this commodity should be exported without any barriers. But unfortunately nowadays we are living, and as yesterday, as Uğur mentioned, Russia is continuing imposing the export tax of 15%, and we have these barriers. Now, at least we know how to cope with barriers nowadays, but if in the future China becomes the major scrap exporter, are we sure they're going to export? I don't know the answer. And I don't know how powerful we are to fight against any Chinese barriers of scrap, possible, let's say, scrap exporters for any reason. So I think this is going to be the major discussion in the coming years as the supply is going to, as we foresee, supply is going to change phase. Supplies, majorly the supply is coming from the west. If the supply starts coming from the east, what's going to be? This we are going to discuss in the coming years, and I don't know the answer.
Mm-hmm. Maybe the WTO and other organizations should be a little bit more effective in the market.
Exactly.
Okay. Next one is for the Traders Committee. More or less the same subject, but from a different perspective. How serious a problem do the anti-dumping cases and new taxes and or duties imposed in several countries create for traders? Are the traders able to come up with creative solutions, new sales methods, and what are those methods?
Well, I certainly believe in the traders' ability to come up with solutions, but creative, it sounds almost illegal. That's obviously something that we can't do. This situation with the microalloy situation in China, I would consider to be a creative solution by the Chinese authorities to the detriment of most of us in this room here. And that will probably change during this next 12 months. Anti-dumping cases and new taxes are done by governments, and governments are quite squarish in viewing things, and the traders are quite round at looking at things. And the way things are written, people naturally look to see how to get around these things. And I think that one of the interesting things that is happening, because we're talking now that Africa now is a new continent that is going to be generating consumption and also growth, in that governments are going to be very willing to protect electric arc furnaces in these countries and maybe restrict scrap exports in order to preserve foreign currency, and also to supply them with electricity on favorable rates compared to other regions. They may also, for places that have more rolling mills and electric arc furnaces, try to allow import of billets without tax, and then raise the taxes for rebars and equal angles and so forth. So it's going to be more of a micro-tuning type of thing in these areas that are specific to that one specific country. So it's probably not going to be a general change around the world.
Thank you. We're at the end of the second round of questions. There will be one more round at this point. I'd like to ask if there are any questions from the audience or any comments. Still no questions, so we continue. Once again, the question is a general one, producers, traders. What is your outlook for the market situation in the Arab Spring countries? The Rebar and Wire Suppliers Committee have just mentioned some expectations in the African market, but it was more in a general, broad sense, I guess. What do you think about the Arab countries, spring countries?
It's difficult. I mean, for us, obviously, we just can wait and see what is happening. In our opinion, if we talk about countries in North Africa like Libya, even Tunisia, Libya is slowly but clearly going out of the problem. The market there is back again in a limited, maybe in a limited size, but it's back. Egypt, obviously, is the unrest there is creating some problems, but Egypt is a big market. It's a country of 80 million people, so. And they still want to do business. They still want to. They're still moving. So market is there. Obviously, there are some restrictions now in terms of access to U.S. dollars, banking system. But it's business is still there. The one that is, for me, and maybe here Will can help me. The one that I don't know, I don't have a clue how it's going to end is Syria. I don't have a clue. Probably maybe you can, as you are closer to the country, you can comment there.
There's not much to say, I guess.
No, we heard yesterday, I mean, so the very detailed presentation showed us that there are so many projects in this part of the world, and we see a definitely improvement on the North Africa. Right now there are 2 or 3 spots still having bit of a problem. Syria, of course, is the most important one. Iraq, because of the central government having a little bit of tension with the northern part, is creating a little bit of trouble, and the sanctions against Iran. But we hope that, this will be resolved. I mean, you cannot maintain this chaotic situation forever. Somehow, the world has to come to a certain agreement or a solution. And what I believe in the medium term, I believe there will be good improvement in this part of the world. I mean, being so close to the Western world, and today, lots of people have a chance of traveling, seeing how the people in the Western world live in, what sort of standards they have, so they demand the same. And this is, we observe wherever we go also in area in the MENA region. I mean, if you come to Doha or to Bahrain, to Dubai, Abu Dhabi, those cities are fascinating. In Kaiva, for example, I was in a shopping mall called City Star. I was amazed. That was one of the best shopping mall I've ever seen. And there are so many projects coming after one after the other. And you know, the people deserve and ask for the standards. And I believe this is going to accelerate the activity in the area. And there are funds available. So my expectation in the medium term that there will be a lot of activity in this part of the world.
Thank you. Next question is also on Africa. This time on sub-Saharan and West African rebar markets. Any comments on the outlook for those markets?
It's going to get better.
I gathered some information, just bullet points. As I said, some of obviously the change in Africa has been that, especially in the last decade, it has come from a place, an area where they were always fighting, to an area where finally they said, we are fed up with that, so we want to live in peace. And the gain in political stability, in countries going to democracy, in rates of caps, military caps per week has decreased dramatically. So that has created obviously beautiful expectations to people, and people is starting to live. People is starting to live in peace and being confident and obviously spending money. So as a few data, number one is Africa as a continent now is the fastest growing continent, and is expected to grow in the next 10 years at a rate average 6% a year, the whole continent. So which is really big. As I said, for the last 10 years, after peace has been gaining space in Africa, the real income for people, average real income for people in Africa has increased 30%. Also a particular data, now in Africa there are 3 mobile phones for every 4 people, and is expected all these kind of markets in terms of utilities and electronics, and they're expected to grow, to explode there. So all that is just saying that Africa really is from the last, it has changed. He has come to a new state where people is confident, where people is starting to spend money, and where obviously economies will grow strongly.
Thank you. Next question. Actually, we have heard from producers on the expectations in Asian and Central and South American markets, but this time this is directed to traders, to get traders' opinion. How do you evaluate the long steel product supply situation from Brazil, Russia, India, and China, given the obvious advantages those countries have?
If the question refers to export or just supply, China, of course, is the most important producer there. I believe that they produced around 14.5 million tons of rebars per month last year, and around 12 million tons of wire rod per month. So there is no supply problem from China. It's just a question of what they will be able to consume. Obviously, most of us in this room would be very concerned if demand went down dramatically in China, because even an extra 5 million tons of rebars in 1 year from China or wire rods would be very disruptive for our marketplace. India, I don't think any trader would consider to be a supply for export market on long products. India is an exporter of flat products, but not very much on long products. India has a tremendous growth cycle ahead of it in the future, and I believe that everything that they have in capacity-wise now will be needed to fill that demand going forward the next 10 to 15 years. Russia has been somewhat deficient in long product supply. They are now adding new electric arc furnaces across the region, putting them in geographical areas that will minimize the logistic expenses of moving the stuff around. And that would, like Yusuf mentioned, reduce the amount of scrap coming out of Russia. I think that if growth were to be reduced in Russia over the next 5 years, there would probably be an oversupply situation in Russia on long products. Brazil, a difficult place to understand. They can produce all of the long products that they need. They generally export some long products. They are able to switch in between slabs and billets, as Ur mentioned. So I view them as a balanced market for the short term. However, in 5 years or so, things can change dramatically. Brazil could return to becoming a heavy import market or a heavy export market, depending on the economic activity there.
Thank you. Any other comments at this point? No. Last question I have here is the following. Turkish mills have lost significant volumes in their main export markets in recent years, but have so far been able to find alternatives. What could be the main markets for Turkish exports in the future?
You know, Phil have asked this question yesterday about, he was wondering how Turkish mills were bringing scrap all the way from US and then shipping back their product all the way to US and still be competitive. And I tried to answer that. I mean, the cost issues are know-how, which I won't disclose, but I guess the main strength that the Turkish mills have is their marketing ability. I mean, we did export rebars to New Zealand, to Australia, all the way from Turkey. We are currently shipping rebars to Chile on a regular basis. So this is almost going around the globe. And if you look back in let's say the first part of 60% of the rebars were in fact being disposed in the Southeast Asian markets. And after 97, this went down to 0. And then we've diverted to Europe and US. Today, Europe is almost 0. So there's always an alternative that rebar somewhere in the world is consumed. And I believe Turk's ability is to find these spots and to still ship their products to those markets. The last year, the rebar export was up by almost 20% compared to 2011. My expectation 2013 will remain rather stable because we don't see any additional capacities coming up. Even on contrary, there's increase in the local consumption, which might decrease the total export of rebars. Not significantly, but to a certain extent. So the main markets, I believe, will be African region, MENA region, and Latin America, and also North America, as far as we see. If there will be any other developments in other areas, of course, the Turks will be the first ones reaching there.
Thank you.
Sorry, but we are also exporting to Chile.
Chile. Thank you. That concludes the questions we have collected from several parts of the world to be directed to the chairman of the IREPAS committees. Any other questions from the audience or comments? Let's see. Hadi has a question. Can we bring the microphone for Hadi? I think
thank you very much for all information. My question is actually is a general question to all the panelists. I think one issue which we may have missed and we didn't discuss is the currency issue. The previous question was referring to export shares from India, Brazil, and the others. But we see is some countries like Japan did it. They devaluate the currency to have a better share in the exports, and US, there's a lot of discussions on that. So I wanted to have the point of view of the panelists on this currency war and its effect on the steel market.
The only thing I can say that for obviously we are a producer, we are a mill, we are selling, it's a big headache. It's something you have to live with. It's something that makes you change your selling policies quick. Obviously, we don't, as a mill, we never speculate. When we gotta sell, we sell the dollars, if it is in dollars. As I said, it's giving us a lot of headache. If now, my opinion, not as a mill, but as an observer of what is happening, I think that at this point in time, if I compare euro with US dollar, the parity is going to be relatively moving in a range. Yeah? Because once the euro goes down to 125, the Americans start printing money. Once the euro goes up to, the dollar goes down to, euro goes down to 125, and then when the euro goes up to 135, the Europeans or the Draghi comes and says that's not possible, that cannot be, that's not acceptable. So I think that's going to be the range of fluctuation, and there you have to play it as smart as you can.
My opinion is that the governments are all printing money right now.
Yeah, absolutely.
And what our business is to produce steel, sell steel, and ship steel. And currency has very little to do with the flows of steel. I think that if you look at supply and demand, it's 10 times more important than currency. Our company, we exported 750,000 tons of steel to Europe in 2006 and 2007, when the euro was 120 to the dollar. When the euro was 135, we exported 5,000 tons. That's not intuitive. So, but the reason why we didn't do it was because there wasn't a need and there wasn't a demand.
Yeah, I mean, the steel business is dominated by dollars. I mean, from our perspective, the main cost element is the raw material, by far. What are the other inputs? Energy is again based in dollars. Most of the consumables like the alloys or electrodes and so forth, they're in dollars. So what remains is the cost that incurs locally, your labor cost, which is very minimal as far as steel industry is concerned. And as Michael says, it all depends on price of the steel. Of course, the lower the value of the dollar, it's higher the price of the commodity, or encourages more for importer to bring more foreign materials into his country. But overall, the main issue is the market, the demand, and the appetite of the market. So as far as the prices are okay, it doesn't really matter whether the dollar is down or up, still they bring the material or the activity continues.
Thank you. Any other questions or comments? Hadi, another question from Hadi.
Thank you. Just a quick question on, wanted to have their point of view on coal, basically coking coal market outlook in the next, let's say, 2-3 quarters, and the pricing. That's it.
Wow.
First of all, I cannot comment on prices.
We're the wrong people for that.
Maybe somebody from the audience. Well, if you had asked this question yesterday, there were some people here handling coke business, but today we don't have any experts to answer that question. So sorry about that. All right. Any other comments? Any questions? So no more questions. So once again, ladies and gentlemen, thank you for your interest and for your participation. And my sincere thanks to the chairman of the IREPAS committees for your contributions, for answering all these questions. It has been great to be in the beautiful city of Doha, and this concludes the 68th IREPAS meeting at this point. I would like to thank all the distinguished speakers that have shared their experiences and opinions with us during the course of these 2 days. And I would also like to thank our sponsors, starting with Qatar Steel, obviously Liberty Commodities, Conares Metal Supply, Arad Digital International, Al Watania Steel, and Nucor Trading. Our next meeting will take place in Istanbul, as Mr. Dalbeler mentioned yesterday. It is going to be the 30th anniversary meeting of IREPAS, and the dates of the meeting have already been fixed. It is going to take place on 22nd to 24th of September. So once again, thanks for your contributions, thanks for your interest and participation. Hope to see you in Istanbul in September. Thank you.